And here we go. It's been a while since I've done one of these. Finally got back home. I recently just graduated from college, so now I'm back down to Florida and decided to start making these videos again. So I made one of these a long time ago, probably 4 months ago, about my M1 finance portfolio. So I figured I'm going to start doing it again. And as you can see here, this is just what the main screen in M1 Finance looks like for your portfolio. My graph looks all funky because I've withdrew my money and then put it back in a couple times for various reasons. But here we are now, currently at 2,741, almost to where we were at 3,100. That was the highest it's ever been. So working our way back up there. As you can see, the market gain is plus 41.25 and the earned dividends is 89. So pretty much the only reason this portfolio is in the green right now is because of my dividends, which is the main reason for this account. It's a passive income account, so I keep putting money in every single week and expect the dividends to grow over time and create a passive income stream. So the holdings I have in here are pretty much companies that everybody knows, like AT&T, Verizon, Johnson & Johnson, Pfizer. Just very low-key, not crazy companies that are going to make huge moves up and down every single day, but they're pretty much more stable, and they pay me out dividends either quarterly or monthly. This one that I've recently been interested in is called Jeppy. Friend showed me this one, and it's JP Morgan's premium income ETF. So what they do is they buy shares of stock and then they sell covered calls on it to make an income, and then they send it out to people who buy the share of Jeppy like this. They send it out in dividends every single month. So it's pretty high, I believe. The dividend yield, yeah, 7.3%. So that's pretty solid, and you can see over the past 6 months that they've done really well. So this has been a good investment. I'm going to keep adding into this over time. So right now I think I have it as like 6% is of my portfolio, just because it's by itself here. Yeah, Jeppy is about 6%, and then everything else I have uh, layered differently. So I'll have real estate, healthcare, finance, and if you click on one of these, it has a bunch of different finance companies and things like that. So the thing about this portfolio is every single stock or holding in this portfolio pays me a dividend. And if it ever cuts their dividend, I will most likely cut the stock out of my portfolio and either add to the rest or add to a different one. But as you can see, this is the reason that my gain is actually in the green, because my earned dividends are almost at $90. And I've been pretty bad with taking it out and putting it back in for various reasons, but now, since I'm out of college and I'm going to start working, the plan is to put in at least $100 a week. So today was actually the first day I started that. You can see here the deposit of $100, and it had 20 buys this morning. Jeppy was the biggest one because I recently moved the weight up from 4% to 6% in my portfolio. And then all these other ones that we know just get small deposits into it, and then the dividends just drip back into the portfolio. So you could see here that just in this month of May, you could see all the dividends that I've gotten. Not looking at the deposits here and the buys, but everything else, it just slowly comes in. And then the cool thing about M1, once your cash balance reaches $20, I believe. Oh, let's see here. Once it reaches $25, then it automatically reinvests for you. So if any point my dividends hit over $25 before I deposit more, then it'll just automatically reinvest into the stocks that need it. And the cool thing about them being weighted in the portfolio, if something were to go down, like say we go to the finance sector here and say Bank of America has a pretty bad week and they're down, so it'll be pretty much its target weight will be less than 18%, so it'll buy it more that week. So it's kind of nice because it buys the stocks when they're dipping and kind of evens out the portfolio for you itself. But the reason I'm doing this is because I've invested for probably 4 or 5 years now And I've tried all like the options trading and the things like that, and I have little success with it. I know people who can do it, and they're very smart and able to do that. But for me, it's just too much stress, and I don't have enough success with it. So the thing I want to show you guys here is the compound interest calculator, and just kind of like what's possible. So if I were putting in $100 every single week, that would be $400 monthly, and just say like 20 years. In 20 years, I'll be 42 years old. I'll be an old man. And the estimated interest rate, this is 7%. I think the dividend yield for my whole portfolio is 4%. So 3% gain just on the stock price itself is shooting pretty low, to be honest, because the S&P averages about 7 to 10%, I think, per year. So this is pretty low. And the variance is 3, so it can go up to 10 or it can go down to 4 if it does bad. And we'll just do compounding monthly, since I have some dividends that give you money monthly, and I pretty much put money in every week. So if we were to calculate this here in 20 years, just putting in $100 every single week, I would have around $219,000 if it was exactly 7%. If it went up to 10% here, then it would go all the way up to $324,000. And if I only got a 4% gain over those 20 years, then I would be at $152,000 down here. But the thing is, this dividend portfolio, it takes a long time, but it's not as risky as the other ones. So you're not going to become rich overnight, but it works for you. Your money starts working for you. Because if we add here, if we go up to 30 years, then you can see, then it really starts taking off. And if it goes to 10%, then you're almost at $1 million. And then just the estimated 7% here, you're still at $510,000, which is still a lot of money to have. And that's when I would be 50 years old. So that's pretty good spot to be when you're 50 years old. So yeah, M1 Finance is pretty cool. I'll keep sticking with these videos every single week. If any of you guys are interested in M1 Finance or just curious and have some questions, you can comment down below, or I'll even put my email down below as well. You can email me and just talk about it. I'm not affiliated with M1 Finance at all, so it's all my honest opinion, and I've used it for quite a while here. You can see I've used it since October 2019, so getting close to 2 years now, and I still like it a lot. I think the layout is very clean and easy, and I like the things they do. But alright, first video back. Thanks for watching, you guys.